Hi, my name is Mike Hetman. Welcome to another edition of CMS Forex News. Today is Thursday, March 27th, 2008. New Zealand's trade balance showed a surplus for only the second time in the last 9 months. Thanks to rising commodity prices, particularly on dairy products that New Zealand produces, exports surged by about 600 million New Zealand dollars, while imports showed a smaller increase. After gaining 180 pips on Monday and Tuesday and setting a new high on Wednesday, the New Zealand-US dollar pair traded sideways today, ranging between 0.80 and 0.8050. The trade balance data didn't excite the markets. Australia's leading indicator showed an economy dipping into negative territory. The Conference Board's index of leading indicators posted a 0.3% fall for the January period. The index had been humming along, a growth rate above 0.5% for the 4 months before easing to 0.2% in December, and then turning negative for January. The Aussie dollar pair did touch a new high today at 0.9250, culminating to a 260 pip climb that started at the beginning of the week. Aussie strength this week is working on recovering its losses during last week. Turning to Germany, the GfK Consumer Confidence Index showed that mood among German consumers improved slightly in March. The index surprised expectations of a decline by edging up from 4.5 to 4.6. In the UK, fourth quarter business investment figures were revised sharply. Actual spending on investments increased 1.8%, while preliminary estimates saw a 0.5% decline. In a second release, a survey of retail activity conducted by CBI showed that the number of retailers reporting better sales edged out those reporting weaker sales by 1%. The pound surged 135 pips overnight following the two releases, setting a high at 2.0190. This capped a rally of more than 300 pips over the last 3 sessions. As New York trading began, the dollar pared its earlier losses and was trading back near the day's open. The euro dollar was consolidating today after weaker durable goods data and stronger than expected business sentiment reading in Germany boosted the pair to a high of 1.5850 yesterday. The pair is up 360 pips for the week, erasing last week's losses. The next major resistance level is 1.59. In the U.S., weekly jobless claims fell by 9,000 to 366,000, a better result than forecasted. However, the 4-week moving average for claims rose for a third straight week. The number of continuing claims decreased by 20,000. There was no change to the fourth quarter GDP rate. The final version matched the preliminary estimate, the annual rate of 0.6%. Growth in the fourth quarter was anemic as the economy began showing significant indications of a slowdown, especially coming after a third quarter where the growth rate was a respectable 4.9%. Overnight, the dollar-yen pair set a new low for this week at 98.55, a support level from last week. During European trading, the dollar bounced back, rallying 130 pips to test the 100 barrier. During New York trading, the pair entered a period of consolidation as U.S. stock markets were mixed to the U.S. data and gave no clear indications for currency traders. Tonight, we will get several end-of-the-month releases for Japan, including consumer prices, the unemployment rate, household spending, and retail sales. Overnight, UK will post its revised GDP figures for the fourth quarter, along with its current account and the nationwide measure of housing prices. In the U.S., the end of the week will bring data on personal income and spending and a final version of the UMich consumer confidence for March. This wraps up Forex in the News. I'm Mike Hetman. Thanks for watching.